recording. Hey everybody, thanks so much for tuning into Young Money Investments. My name is Bennion, and today we are finally filming down here in Louisiana, trying to get like an actual video done. I know it has been kind of a couple weeks. I've been very busy with a lot of my work, doing summer sales, doing training, meetings, getting all this stuff going. So it has been really crazy. I apologize that I've not done as many hands-on focused videos on teaching you more about swing trading, the long-term investment strategies, those kinds of things. I know if you follow me on Instagram, you've obviously still seen a lot of my stuff that I've been doing. But you've also kind of probably seen that the markets have been really bad over the past couple weeks. I've had to hold a lot of swing trade positions that I made. Must have been a few weeks back when we had kind of a market correction. I was expecting those to continually trend up, and unfortunately what I've seen with those positions is they were consolidating. I did not obviously buy after seeing the correction on the EMA, and following some of the strategies that I had, I was mostly just dip buying. And the problem with dip buying is sometimes you're not buying those because they're on an ascending uptrend pattern. You need to see that ascending uptrend pattern in order to be buying into something that is going up. I've had issues where I bought into drip and I've had to wait it out and play the consolidation. I've had issues where I bought into Facebook, and Facebook has been pretty flat until today, and I can't wait to go over that. Some of the other ones that I know have crushed it. Amazon today, I am just raking it in. That's again my long-term position, though. I'm not looking at that as a short-term position. OLED has been another one that has unfortunately really been consolidating and not really doing what I've wanted. Overstock.com has done very well as of recent. The past couple days it's been up quite a bit, but it's again not up to the price point that I want it to be at. Like I said, Amazon has killed it. Eli Callaway Golf, I'm up another 8% today. I'm up a total of 24.27% since I entered that long-term position. But what I want to do as far as this video is I want to cover two separate things. I want to cover the importance of long-term trading as well as the importance of diversifying your investment strategy. So if you follow my channel, mostly you're probably following it because my investment strategy is a little bit different than most people's. My personal strategy is that I like to have a position in several long-term companies that I see long-term growth and potential in, but then having part of my portfolio as well in swing trades and short-term investments, because I do see the potential for growth short-term in a lot of those. Rhett Van Leeuwen, one of my pretty good friends, has really made it successful, made a living essentially off of short-term trading, off of shorting stocks. So there's so many different strategies. For me, I like to have a blend of everything. I like to be a hybrid trader, which I just made that term up. It's not a real term. But I do like to have a mixture of long-term investments along with short-term investments because it diversifies the risk. If you're younger, especially, you have time to ride out the highs and the lows of the market. And so to just jump into one strategy all in, unless you are really good and you're determined and you know for a fact that that's going to work, I don't recommend that. So the way my portfolio breaks down, I would say I probably have a solid 60 to 70, probably 60% in long-term investments. I have a total of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I'd say about 11 companies that I'm currently invested in. Out of those 11 companies, I'd say let's go with long-term here. Libre Mercado is going to be one that I would say is a decently long-term, if not a long swing. Facebook, I do see long-term value in. I do have more money invested in them than I'd like to have for the long term, so it's a hybrid. Some of those shares I will sell off when it gets to a certain price point. Some of those I will hold for years. Let's see, DRN is going to be a short term. Amazon is definitely long term. Apple is going to be long term. Callaway Golf long term. Alibaba decently long. Lockheed Martin and Cirrus Logic. So I would say out of those 11 companies, probably about eight of those are going to be um, 8 of those are going to be long-term positions or long-term holdings. I don't like to have a whole bunch of swing trades open, although I do have a decent amount of assets, which I don't want to cover the exact position or the exact amount that I have in those. But I do have a decent amount of cash in those three to four um, swing trades that I'm taking part in. So how I would maybe break that down, I've gotten several questions and I've gotten a couple requests for this video. How I would break it down is I usually would like to keep probably a 60-40 ratio, maybe even a 65 35% ratio in terms of what I hold long term and what I swing trade in. The reason I'm doing that is because I wouldn't classify myself as this amazing, gifted swing trader yet. I do have my paper trading account that I'm still working on, that I still use in conjunction with my actual account. So the reason I do that again is risk. It's risk diversification, right? I've done really well long-term trading. That's how I've made my money. But I do see the value in swing trading and technical analysis. I've done well enough in it that it's obviously worthwhile to continually add more to it. Maybe as I get better, and obviously as you probably get better and you are looking to do more swing trades, maybe have a 50-50 in your ratio of long term versus short term. That's not a bad idea, and I probably will get to that and take that 15% and move it more into swing trades. What I'm going to look at really quick are a couple companies that I do see long term, or so long term swing trading, or maybe short term long term trading. So a couple different long term positions that I see value in buying potentially right now. First one is going to be L Brands. So L Brands has had quite a recent sell-off and quite a consolidation if you're looking down here along this support and resistance line. Even from some of its lows, I mean, it's currently trading at about 35.17. I see potential resistance right here at about 36.27. I do have a buy order, obviously, right in this area at 41.86. I potentially see buying shares even down here. You can see it on the 180-day chart here. It's had quite some consolidation. It's consolidating down here in this area. The reason I consider this a long-term trade is because I'm not buying based off of EMA or SMA. I'm buying off of the charts, and I do see some of the 10Ks and some of the financials with this company looking really good. So that's the reason that I'm buying into it. It's not because of the chart pattern necessarily, although it corroborates my story in terms of a good buying opportunity. I'm looking at the RSI right down here, trading at an RSI right now of about 42 on the 2-week, I want to say, 2-week RSI. It's not high, it's not low. So it's not necessarily saying that it's a great buy based on RSI, but I use an RSI for a short-term trade, for a swing trade. Same thing goes with MACD. So I'm not using this technical analysis for it. If you look down here, you're going to see the volume. Obviously, it's having pretty consistent, steady volume down here. I don't think the volume is necessarily moved out of L Brands, but it definitely is lower. I see this long term being a good buy. So whether we do swing it and it all of a sudden pops to high heaven, great. If not, like I said, I see holding this and being able to sell potentially somewhere up here in about the mid 40s, just to be safe. But I mean, you do have potential play from about 40 to where we're at now. I mean, you're looking at a potential profit of about 25%. So see that as a great long-term buy. I'm trying to think of some of the other ones I'm currently in that would be good opportunities as well. Drip. So Drip is actually up. I just got a notification. It's up 5% right now. Drip is actually going to be a swing trade. I don't know why this is not as up to date. But I do see quite a bit of value in this ETF. So it has obviously been on a consistent downtrend pattern. It has had a lot of consolidation down here at this 820 mark. I do see potential for growth right up into this potential area. So if you do you do take a look here, I mean 44% potential for profit. To me, you can't turn that down. Check the analysis. I'm not going to go over everything and why I see this as a good buy opportunity. Obviously, you can see RSI, you can see MACD, you can see the chart patterns. I'd say look at the SMA, EMAs. So even if you do get a run up to about this point, you're looking at about 30% potential for profit when you do find some potential resistance from the SMA. Other companies I am looking at or am also taking part in and trading. Let's take a look at Facebook. Facebook is one that has really shot up quite a bit. And I will give you my personal recommendation on whether I think it's a good buy or sell. Buy or hold. Right now, with such an increase, it shot up 10% yesterday. I would say if it pulls back from highs of right around here at about 177 or even 173, if you get some consolidation right here at about $173, meaning it bounces off of this support right in here, so we'll draw that line. If you get support where it bounces off of this, I do see another potential for profit if we're riding it from support up to resistance of about 6%. So that does offer a nice potential for a swing trade if you're looking for a nice 6% return. Usually the time frame that it takes for it to do that, you're looking at that would be on 8:30, and this would be 8:30 to, let's see if it'll tell us. 8:30, so that's just the start and end. I guess you're looking at the dates down here. This was probably this was 3.5, maybe 3.4, and this was that was less than a week, basically, is what I was looking at. So it takes about a week's time for that 6% return. If you ask yourself, hey, is a week worth 6% of a return? I'd say yes. So I like Facebook. I like Facebook because I see long-term potential for growth. I don't think it's going to max out at 177. So even if it did come up here, you had bought down here at 177 and it pulled back again, I see it as a good long-term position. That's what I do like to do with some of my swing trades. A lot of folks, you'll trade things on a swing trade that you probably otherwise would not hold for long periods of time. My very best swing trades have been the positions, and the ones I felt the most secure in have been the ones that I would hold long term. Tesla was a great swing trade, $15,000. Nvidia was another one, $6,000. Those are two companies that I would hold long term, and so it made me feel really comfortable. It made me feel super safe. It made me not worry so much when I was holding almost a $98,000 or $99,000 position in Tesla in order to make that. So those are things that I would take into consideration and keep in mind when you are swing trading some of these companies. That's why I like swing trading Facebook. That's why I like trading these bigger companies. When there is volatility, you can still afford to hold long term and you're not really risking anything. Drip, for example, I don't like swing trading that because unfortunately it's on a descending pattern and I don't see long-term value. So if it does have a correction and I didn't sell out, I'm left bag holding like I currently am right now. And so I see potential for it, but you have to have big stones in order to be able to hold that for those longer periods of time. So those are a couple things I wanted to go over. Another long-term position that's had a major sell-off recently, which I see holding for a long-term hold, is going to be Cirrus Logic. They make chips for iPhones. 80% of their business are iPhones. I see holding them for at least the next couple years. So I'm not going to see big return or big payoff in them for a little while. But if you do look at how they've had such a massive sell-off recently, I'm average cost in much higher, probably up in this price range. Well, actually, no, I'm not that high. I'm about $40 averaged in. So just so you don't think I'm retarded. I am average cost in probably somewhere right in about the $40 price range. So that still is quite a bit down. I'm probably down 12 or 13% on it, but I do see a good buying opportunity in Cirrus Logic as well. I think that's about everything I wanted to go over today. Eli has shot up, like I said, quite a bit. That's been a great holding. Another long-term company, I'll just let you know what I'm in. I'm in Cirrus Logic, Lockheed Martin, Alibaba, Callaway Golf. Apple, of course, I do see long-term potential with Apple. Apple's not one that I'm swing trading. I think it would be a stupid, stupid mistake not to have Apple in your portfolio. Apple is the largest company, and I'm going to pull this up so that I can do a full-size screen. I don't think we need that anymore, but let's do this. Let's pull this up and make it full-size here. I think not having Apple in your portfolio is a very dumb decision, to be quite honest with you. There we go. I think it's dumb to not have Apple in your portfolio. The reason I think that is because Apple affects everything in the market, whether or not you're in Apple. If Apple is down on the day, most likely the whole market is down on the day. If Apple is up, most likely the whole market is up. Apple is going to be the first company with $1 trillion market cap. If you don't have Apple, that's fine, but I personally just see a lot of value in them. I don't think they're valuated correctly right now. Their PE is remarkably low. If you have any questions about any of that stuff, be sure to ask me. Other companies I'm in Himax, which is, I wouldn't get into that. It's a smaller cap company right now. Amazon, again, 4.84% up today. DRN is a housing real estate ETF swing trade that I'm doing. I wouldn't recommend getting in that, although it's up 4.94% today. I don't recommend it. Libre Mercado, that one is one that I'm in for a long-term / swing trade. I can do a chart pattern on that maybe another day. Overstock.com, I'm in that as far as swing trade going on right now. OLED again, Universal Displays, it's a swing trade I'm in currently. With the consolidation and the non-reversal that I've seen in it, I don't recommend getting in on that swing trade. DRIP, I do see potential. It's up 3.77% today. It's been consolidating down here at the 824, 820 mark. We're at 854 today as far as what I'm reading right now. And so that one I do see as a potential good swing trade to get into. A couple other companies, like I said, that I'm going to be getting into. L Brands is one that I'm going to add to my portfolio, whether it be a long-term swing or whether it be a long-term hold. I'm going to add more Cirrus Logic to my position. I wish I had more Callaway Golf. I don't see buying it at the $17 price point that it's at right now because I got in at the $14 price point. eBay is another good one that I would maybe do. I'm probably not going to get into it, but the chart and everything looks really good for it, especially whatever happens after earnings. If they sell off after earnings a little bit, I think it's a great buying opportunity. My hope is if you do buy in, buy it at a lower price. Hopefully you're not buying it at a higher price. So if you wanted to average in and maybe buy some before earnings and then do whatever you wanted after, that's a potentially good idea. So that's all I wanted to say for today. That is my new video. Thank you so much. I'm going to try and make more videos being down here in Louisiana. It is hard to do that with everything that's going on. But I want to keep y'all up to date. I want to keep y'all in the loop. If there's a specific video that you want me to film or specific things that you want me to go over, I feel like this video was a little mixed, but let me know.